We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up AUD, CAD. We are on the 12-month time frame. Price action, last candle to right hand side is a bearish red candle. Current price is sitting at 0.88049. If price action pushes up to the overall highs of structure, it can tag that green and red towards the top left, and I'll be at the numbers of 1.41443. If price action come down, it can come down towards that red and green towards the bottom, which would be the support. And that will be near the numbers of 0.81222. And we're also going to add that midpoint in the middle. And now we can take a look at what's going on in the market. So we can see when the market started off at a high, it broke down through the midpoint line. And then we just received consolidation. So we're trying to find that consolidation pattern that see if that market's going to push up, push down, or continue to consolidate sideways. So as we enter price action, as I said before, price action being a bearish red candle, so that market is trying to work its way down. It's within the second to last candle of the market, so that market's creating that consolidation. So we are waiting for the breakout to the top side or breakdown to the top towards the bottom side of that second to last candle. So let's draw our screen back to take a look at when that market did touch for that solid red and green towards the bottom, what pattern was formed. So when that market did break into that area, when we did receive solid touches towards that red and green towards the bottom of that support line, was this area here. So this area created the first leg, then we had a second leg, and overall third leg, market pushed up. So we have an overall double bottom pattern, even though we do see a double bottom within this area here because it's identified as a first, second, third, and then pushed out for a W formation. But we're going to read it as a whole. So it's reading as a double bottom, and we can see where price is currently at. When price came back down, is basically retesting that double bottom. So it's hanging out on that midpoint line of second level lows. So if we grab another SR line and we put it towards second level lows, and that's between the midpoint and those are second level lows, we can see that the market did break through, even with the price second, third, fourth to last candle of the market has retested that previous side. So that means that market could be working its way up if it doesn't push down further. So going back towards the drawings that we drew out for that double bottom structure, now we can see that we have that first, second, third, fourth double bottom. Retest happened with the fourth last candle, market pushed back up, and we're going to see if it's going to come back for another retest. If not, then that means it's tagging and it's going to respect the midpoint level of the lower lows of structure and second level lows. So it's a midpoint within that area. So this is why we're looking for the breakout to second to last candle towards the upside or towards that downside. So that means that as we're walking down the time frame, we are looking for price to, let's make this a little tighter. I'm going to bring this SR midpoint line down a little further. So for price to break the SR line that we're currently on to identify a break and retest, if that market's going to break its way down, unless I said before, the market respects the support and then work its way back up. So if price action respects the support line of that second level between that midpoint between second level lows and lowest lows of structure, then it's identifying as market came down with the red candle for that first leg, second leg, third leg, and that's why we're looking for the price action to engulf the second last candle for that breakout. And if that market does follow up with another with this candle being a bullish green candle, work its way up, or the following candle forms and pushes that market up, then we'll see that double bottom formation. Walking down to the 6-month time frame. So price action on the 6-month time frame is reading as a bearish red candle, consolidating with the price second, third, last candle all within each other. So we basically looking for the breakout of the last 3 to 4 candles in that area for that market to break out for that formation. And if it does respects from the second to last candle, because second last candle does have that spike down to a low, which is the midpoint of the third, fourth, fifth, sixth, seventh, the last candle in the low. So we can see that market's touching that area. Let me try to clean it up a little bit. So if we go for the midpoint on that price second, third, fourth, fifth, sixth, seventh to last candle in the market, we can see the second last candle retesting that area. So if it's respecting that area and it pushes up, that means that price action can push down just a little bit further. It will just be within the second to last candle primarily for the breakout to the top side or bottom side. But what I'm saying is, if that market create that first leg, second leg, third leg, and then we can see that market, because that third leg was a spike down to a low with the second to last candle wick, exactly where we at, and that market could push and break out for that double bottom formation. Walking down to 3-month time frame, still have that bearish red candle at price action, so we're going to see if it's going to break or either respect the support and then work its way back up. So we are at the tip of the bottom of that support line. Monthly time frame reading the same thing as well. Bearish red candle working its way down. Now if we look at what if the market does break that SR line, so we do have a bearish red candle, it can draw back and work its way back up. But if you look at the areas of touches, we have a double top, first, second, third, fourth. Okay, then the market came back to retest that double top for another first, second, third, fourth, and this we'll see if the market's going to break, identify a retest to work its way back down further from overall lowest lows of structure, unless it respects and works its way up. So we're looking to see if it's going to break or it's going to respect. Weekly time frame, we having a spike down to a low with that price action candle. So what that market is reading as a doji, so it's in consolidation. Okay, so it did come back to retest the second to last candle, but it pushed down. That price action loss left a little bit of a wick down at the bottom, so that market became a doji. So we do know as we walk down the time frame, we look for that side-by-side candles in the market for the breakout. And we look at the weekly time frame, price action, huge doji, bearish red candle doji, still looking for the breakout. Now, we still look for the breakout of that yellow line that we created for the top side or to the bottom side. If we find it, if we're looking for a midpoint in that area, we have the support. The high would be the top of the third to last candle, grabbing that midpoint in the middle, which would be near the numbers of 0.88454. So we're going to see the market's going to consolidate, retest, break down further. Whatever's going to happen, we are at the midpoint of that area we just created with SR line right below that. So we're going to see what's happening between the support and the SR line that we created. Remember, guys, the yellow line that we created was the breakout. So we look for that market to break out to the top side of that area or towards that bottom side. 4-hour time frame, price action reading as a bullish green candle. So what that's doing is the second to last candle pushed down. Price action came back to retest that second to last candle 3/4 of the way up. Okay, so it just came back to retest. So it's still in consolidation primarily of the second to last candle body. So we're looking for the breakout of that area. Anything that's within that second last candle, as in price action currently is, we just looking for that pattern to form for the breakout to the top side or break down to the bottom side. Now we're walking down to the structure, 3-hour time frame, bearish red candle, still identifying that retest, same as a 2-hour time frame. So it broke the midpoint of the third to last candle midpoint. So we're going to see if that market's going to identify a retest of that third to last candle to work its way up further, unless we receive bullish green candles, which price action will be engulfed in at least the third to last candle of that structure at 0.88271. Very important information, guys. Please review and study Forex pattern cheat sheet, breakout retest strategy. Click on images. Still walking down the time frame, so we see price broke our midpoint line. So we're going to see if it's going to follow up with a retest on that midpoint line as we walking down this time frame. But as we walk down, still we see these bullish green candles. 15-minute time frame, bearish red candle. So now we starting to receive a touch to the top. So this market could be running out of momentum to drop down from this area here, or it consolidates, or it breaks up further. Okay, guys, AUD.